So I have been an investor member of the forum for about coming up on 7 years now. I've been an angel investor and an entrepreneur for almost 30. So I opened my first company at 23 and proceeded with multiple companies in the next decade up to past 20, and then moved over to real estate. So when I became an empty nester, a friend of mine from college said, "You should come to this meeting today. I think you'd like this meeting." So I go to this Keiretsu Forum meeting, which is kind of a Shark Tank type format, but very structured for companies pitch. Like I went to Kirkland, but near Microsoft, so it was the second Wednesday of the month, 4 companies pitch, 3 update. There's gold sheet feedback, there's a social. It's really structured, very welcoming, very interesting, incredibly interesting questions. And I just drank the purple Kool-Aid on the first visit and just really fell for it. So fast forward about 5 years, I bump into them at a real estate conference, find out about a Keiretsu Capital, find out how they're really by investing in the companies, and they really nurture them and care for them and bring them under their wings. And it's a whole different level of investment. And so I said, I think that would be really fun to come help you do. And so here I am.
So you're the investor relations person for them now. What does that entail?
Well, as in working for any startup, for the first about 8 months, I just sort of picked up everything that I could to just help. As it was growing, we were growing about 10 million under management in the first, I think, 14, 15 months, and hired a couple of people to spin out. But in the beginning, you just really do everything. So when you're starting a new fund and you're a new fund manager, being in contact with your investors is hugely important. Just being able to take their calls, to help them with our online platform so they can see their investment, to help them with communication if they haven't received appropriate communication from a company they're working with. It's just really important to let them know that we're there, that we feel comfortable, that we can help them communicate with the entrepreneurs. We do have I call him my house math elite. I love him. Max is an intern that became a full-time employee after graduation this summer. And he does all the complex math spreadsheets that creates the valuation changes, et cetera. So thank God for him. But that's all that stuff is what the investors want to hear and want to understand. And that's what we're here to help them put their money in, help them make the money work right, and let them know what that money's going for.
Who is the group appropriate for? Who should come to Keiretsu and who should not to seek funding?
Well, if you're seeking funding through Keiretsu Forum, the best way, we do have a small percentage of investments that we've done outside of Keiretsu Forum, just really top-notch companies that we've seen present in other organizations. The majority of our investments, though, have actually come through Keiretsu Forum. And the reason that is because of the due diligence and all the checks and balances that happen. In order to even present through Keiretsu Forum, you need to go through a process called deal screening, where you get approved to come through. And that happens in Seattle. It happens the first Wednesday morning of each month. There's usually a month or two backup. 7 or 8 companies will come pitch. Some of our top investors will come in. That's my favorite meeting. You get to really see the companies at a very raw stage. And right there, we'll know if the company's not ready, not fully formed, too advanced, not the right fit, or a perfect match. So Keiretsu Forum starts with a company that really is a late seed or an A round. You're past your friends and family. You have a fully formed company. You have a fully formed management team, or there might be a hole, but you're pretty complete. You have a business model and a plan, and hopefully your go-to-market. Obviously, in some medical and developmental things, it's not quite that. But that's the general idea. We're looking for an A round. Most companies are looking for between 500,000 and 3 million. That being said, I've seen a company do 32 million. I saw a real estate company do that, and saw a medical company do 19 a couple years ago. So if it's a great opportunity, people will come out and invest, and you can go through the Keiretsu globally and expand that investment.
Do they have to be from your local area, or can they be from anywhere?
No, they can be from anywhere. We have 52 chapters now, I believe, globally. Judith Englehart handles the global openings out in San Francisco. It's hard to keep up. They're on the back of the business cards. I feel like I'm constantly reprinting because there's new chapters. So that just lets you know there's like deal flow all around the world. There's investors all around the world. Spain is the number 2 country behind the United States in Keiretsu as far as investment. which I find fascinating. We're invested in a female entrepreneur out of Istanbul, Turkey, 3-time champion, exited 28x to her previous investors, professor at a college over there. I mean, amazing opportunity. We would never see that if we were only, looking in our local area. So we're definitely reaching out for the stars is what we're looking for. Great companies.
So there's a lot of angel networks around the world. How is Keiretsu different from your average angel network? What's unique there?
I would definitely say our due diligence process. So again, Keiretsu Forum and Keiretsu Capital are two different things. So I'm a member of Keiretsu Forum, but I'm working at Keiretsu Capital, just to be very clear about it, right? So when you're in Keiretsu Forum, you have to be invited to come in. It's a pay membership. The companies pay to present. It's not a broker dealer. There's no fiduciary in there other than, we're hosting the event at Keiretsu Forum. In the process of that, the staff at Keiretsu Forum in Pacific Northwest and the interns collect gold sheet feedback, and they get written feedback from all the investors and the people in the audience. In the Pacific Northwest, we have about 450 members up here. We're a very large chapter. We have Vancouver down to Portland. And out of that gold sheet feedback, they get volunteers to work on the due diligence process. This is why I joined right here. So the due diligence process, if you come through Keiretsu Forum, is a free, unpaid document that multiple people work on. So you may do the marketing review, I may do the legal review, Susan may do the accounting review, the site visit, the product visit, et cetera. And 7 to 10 people will get together and each write a different section of that due diligence report for free. And they come at their own time, at their own pace. Most of them are generally interested in investing in the company. It gives them a very close, hard look. And that can turn out, 180-page document easy. And boy, is that a powerful piece of material that you can take to any investor, to any angel group worldwide. And I don't believe any other angel group has anything even close to that.
So how do you get the members to do that much work at no charge? I've done many angel networks, and for a while people do that, but in the long haul, that really is a very special thing. How do you guys pull that off?
Well, we have a lot of members, so that's helpful, right? So it's like a lot of hands make light work. So doing a due diligence report, if it was, 2 people working on it, it would be daunting and we would lose people right away. But when a company comes through that you're interested in, but maybe you don't fully understand, but boy, does that sound interesting to you as an investor, what a great opportunity to get on the due diligence report. You can really dig in. You get to know they do weekly calls. It's structured, first of all. So we have a template. You're not shooting blind. There's a template. We have a due diligence director that helps manage the process a little bit. They generally do weekly calls and try to kind of get everybody on task. But I mean, the good due diligence person will jump right in, dig into, get your, the company will turn their list of documents in to review or whatever the case may be. And then the person will dig right in and look hard at it. And boy, does that make your investment decisions so much easier once you've actually spent, even 10 hours working on researching, talking 4 to 6 weeks with this group of people. And it becomes, they don't all pass. They don't all get done, for sure. But the ones that do get done, about 75 or 80% of them get funding. And I would say that same percentage is for the people that actually work on the due diligence report, probably invest in the company.
Well, it seems like there's an advantage to the entrepreneur who is bringing the due diligence already prepared. What impact does that have on the process?
Well, certainly the more prepared and more organized the entrepreneur, absolutely, you are correct. The better, the faster the process goes. I have a real estate company coming through right now out of Portland, and I'm telling you, I've never seen anybody more prepared. They have a Dropbox. They have 10 years back of their financials in the Dropbox. Like, who does that, right? So he's been in real estate a long time, but he's changing his format into a fund. But boy, is he super prepared. So his due diligence, if it's not completed, it will be completed very quickly.
So of all the people that come to the screening meeting, what % actually get funding at the end of that process?
What it really is determined on the due diligence report. The actual percentage, we get like 90 to 100 applicants a month for funding.
Okay.
That narrows down to like 10 or 8 that come to deal screening. That narrows down to 4 that pitch, each one. So, I mean, from deal screening, from initial application, the percentage is very small. But from due diligence, it's very high.
I see. Okay. And what sectors do you guys invest in? What type of deals or is it just everything under the sun, or is there specific sectors that tend to get more interest than others?
Well, I will say in the Pacific Northwest, we are open to all genres of business. And as my own personal portfolio has been everything from tech to travel to media to apparel, right? So we are like that up here. But we're very special up here because we're such an entrepreneurial environment. If you don't have a startup you're working on somewhere up here, there's something wrong with you in the conversation. It's kind of interesting. So I love to come to the meetings here because at any given time you can have the investor can be on, oh, I'm doing a new company and now he's pitching. Oh, last month he was investing. And I don't find that in the New York and Miami chapters. They're much more, they tend to be less entrepreneurial, more retired like M&A people, more focused on medical and tech in very specific regions, where in Northern California and the Pacific Northwest we're much larger chapters and we have much larger genres of business to satisfy those larger members and the diversity. The truth is, if you're only angel investing and you don't have real estate, you probably don't have the right portfolio, right? So everybody needs to have some real estate probably, and needs to have some higher risk, higher opportunity investments in their portfolio.
It sounds like you're what I would call an entrepreneur angel network, where most of the members are entrepreneurs as well as investors. What kind of advantage does that give you over the Miami or the New York chapter, where they're probably just investor-only members?
All right, now I'm getting myself in trouble, I think. Howard, if you're listening, I love New York and Miami. So I'll tread lightly there, but I do think it's really, very, very powerful. I have a company right now that we're invested in that, it is really hard for companies to grow, to pivot, to really launch. And I have a company right now that is just the sky is the limit, right? It is on the journey right now. Well, that same entrepreneur that's a bit of a cowboy that needs to push that thing up and get it going, right, is needs to be able to be mature enough to let, they call them the gray hairs, although I won't claim to have any, but the more mature entrepreneurs come in and really help them scale and not make mistakes, because we all made them when we were young opening our business. We signed stupid contracts and did dumb things that if we just had someone 10 years our senior would have told us not to do that, we wouldn't have. And that entrepreneur right now is, God bless him, he is absorbing change, absorbing information. He's absorbed 2 or 3 more people onto the board. He is allowing himself to be pruned to have the company really grow, which is just so mature and so fantastic, and makes me so much even more excited about what's happening with this company. So yeah, I mean, I think when you have entrepreneurs there, they can really help make them work. We've been there.
Right. I've worked in groups where one session someone's on the investor side of the table, and the next session they're on the entrepreneur side of the table. And I found that if they were familiar with the entrepreneur side of it, they tend to understand or ask much better questions, because they know where the real challenges are in that particular deal. And so a deeper understanding of the entrepreneur's business makes for more interesting questions, I found, in the due diligence section. But it sounds like you have a great group up there, 450 people. That's quite a group of up there. What kind of funds have you invested over the past couple of years? What level of investments have come out of the group?
Again, I work on the capital side, so I don't exactly have the funding numbers in front of me. I think last year we did in the rounds of 27 million inside our organization and another like 11 million of referral business from our organization just here in the Pacific Northwest.
Okay.
Where the Keiretsu Forum is the #1 venture funder in the country, or maybe in the globe. I think we did 106 deals last year globally, according to PitchBook, right? So PitchBook has its #1 for deals and for monies transacted, I believe. So,
well, we're based in Austin. We cover Texas and then most of the country as well, but we are centered in Texas, and we don't have a Keiretsu network here. If we wanted one, how would we get one?
Wow. And hasn't that been the golden question of the year? First of all, I love Texas. I grew up in Montana, right? So Texas is South Montana and Montana is North Texas. That's what we call that. So I love it. And I went to a real estate conference there where George Bush was the speaker, and that's how I ended up back to work because Nathan and Randy were there with Keiretsu Capital. That's how I found out about it. And we had such a great time there in Texas. I ended up back to work. So we have investors out of Texas. We have that Sephora, one of our very large medical companies that did the $19 million in fundraising is out of, I believe, Austin, actually.
That's right.
And they just went into a publicly held company, and he's a superstar entrepreneur. And I'd love to have a chapter there. So Judy Englehart handles our chapter openings, but is a franchise model. So it's a fee base to get it started, and they get you started with some, general templates. You get the due diligence outline and the outline how to start the chapter, but it's really someone that has a good network of people. Generally, I find probably someone that's kind of retired, young, that isn't ready to be done really with work, but doesn't really want to run their own company right now. I find that's probably the best person. So it allows you to get your friends together. You get to do this really structured investment. You get to look at the best deal flow around the world. You get to get into our online platform with all of our companies globally. And what a great, awesome network of just friends and people. So we'd love to have a chapter down there. Please have someone reach out to me if they're interested. I'll connect them with Judy and give them the details on how to get that done.
Well, from time to time, I have people that want to do angel investing, and we have angel networks here. We have 17 of them in Texas, 5 that are large and the rest that are medium size. And so there's always angels are very diverse. They flock together with people of like mind and structure and availability and so forth. And there's probably an opportunity for Keiretsu here as well, given there's yet another group out there that is catering to funding startups. And of course, that's what we're all about, is helping entrepreneurs be successful with fundraising and helping investors be successful with investing. Got to make both sides of that equation work, and so for it to continue or sustain. And so it seemed like there might be an opportunity here as well.
Yeah, absolutely. Yeah.
So one other thing before we go is, I noticed you said before you need to have a mixture in your portfolio, and portfolio diversification is always an important issue. And if you had to put a little bit more detail around how would you diversify a portfolio between real estate, startups, and maybe other items, how would you divide that up, or what would you recommend to a first-time investor? Certainly, I haven't heard anybody recommend putting 100% of your investment into early stage startups, but there's some portion there, some for later stage, and other investment opportunities. How would you divide it up?
Well, when I'm working, I work a lot in the family office market, and I bring the companies out there to get funding. And so they're always very curious. We're kind of creating a bridge between the family office and the early stage startup, which they're normally insulated from. And so I explain it to them like this. You're right. Everybody should only really have a certain amount earmarked kind of over here. So if you have, let's say, $1 million earmarked in the space, so if you are really don't have time and you're kind of inexperienced in the space, it is definitely better to go into a fund type structure in an angel investment, because 80 to 90% of the companies will fail. And even a very active angel will only do 3 to 5 investments a year. And so the only way you can get to that 20 to 30, 40 number is if you invest in a fund. So if you have $1 million, you could put 500 into a fund, say, 10-year fund, long wait, high risk, high return. Put 500,000 into a real estate fund where you can be getting a check back or EBITDA in your account every single month. You can get funds. We pay 7%. Some of the notes pay up to 8 or 10%. You have a 12 or 14% profit over that. So you can have some income coming in. Helps you to be patient while you're waiting for this other side. In our fund, as in most, I think, early stage funds, you have the ability to put your 50, 500, $100 million into the fund, and then also co-invest in a particular company if you're interested in that fund, but it will still be packaged with all your fund documents. And in our case, we have it on an online platform, so you can look at everything all together, which is really nice. Then when you become either have more time or you become more experienced in this space, you can then you can really go off and do larger particular investments. But it's all based on your amount of zeros in your checkbook, what you're comfortable with investing, and certainly never invest more in this space than you're comfortable with. And real estate is always a safe for the counter of the high risk angel investing.
Well, that's a good matching between income producing and long term growth is real estate and startups in the same portfolio, and getting the mixture right, I think probably give you a better return at the end of the day versus all of one or all of the other for sure.
Right.
Well, very good. Well, I'd love to have you come back and talk more about portfolio management, deal flow processing, and other great things that are going on at Keiretsu. It sounds like you have a really lively, dynamic group there that's a lot of fun to work with, and love to have you come back and give us more details about what you guys are seeing out there and how that pro group is going.
Oh, and thank you so much. We'd love to have you up to Seattle. We just had our large Angel Capital Expo. So we have that every summer and have another one in March. But every month we have meetings. We'd love to have you here anytime. Please let me know. And thank you for having me.